With mortgage rates starting to fall and additional Fed rate cuts expected through the end of this year and well into 2025, the question begs to be asked, is now the right time, whether you're buying, selling, or considering refinancing? So let's cut through the uncertainty and dive deep into what lower mortgage rates mean for you in 2024. Whether you're a home buyer, an investor, or a current homeowner, this shift in rates could change the game. But is it all good news? In today's video, we'll break down what you need to know and the opportunities that you can take advantage of right now. But before we jump in, do me a favor and smash that like button, subscribe, and of course, share. Share this with someone that you know who could benefit, because sharing is caring, especially when it can help someone save thousands of dollars. Let's get started. So here's the deal. The Federal Reserve doesn't directly control mortgage rates, but its actions heavily influence them. The recent Fed discussions around cutting rates after keeping them at a 17-year high have sent mortgage rates sliding. As of this week, even before the Fed had their first rate cut, mortgage interest rates fell to 6.12%. That's the lowest that we've seen since February 2023. Now, I know what you're thinking. A 1% drop in rates. I mean, how big of a deal is that? To me, personally? Well, let me give you some perspective. On a $422,600 home, which is the national median home price, locking in a 6% instead of a 7% interest rate could save you more than $2,600 a year in interest payments alone. Here in the Denver metro, with a median price point of $590,000, that savings jumps up over $3,700. I mean, that's real money. So for all my first-time homebuyers out there, this could be your window of opportunity to break into the market. But it's not just all about the new buyers. Homeowners, especially those who've locked in ultra-low pandemic-era rates, have been sitting tight because they don't want to give up their sweet 3% mortgage rate. That's created a supply problem, especially of good homes. Fewer HGTV-ready homes on the market means more competition and bidding wars for those that are. With rates dropping, this lock-in effect is starting to break. Homeowners who wanted to sell but couldn't justify the next mortgage are now reconsidering. As rates continue to fall, it might just be the push sellers needed to jump back into the market. And for you owners who aren't necessarily thinking about selling, I know that you're asking, is now the right time to refinance? And the answer isn't really a yes or no. It's more of a it depends. I mean, for homeowners who bought in 2022 or 2023 at rates north of 7%, you might already be in the money for a refinance. If you're sitting with a 7.5% mortgage interest rate, you could refinance into a lower 6% range, saving you hundreds on your monthly payments. And with more expected rates coming in 2024, locking in a better rate could mean serious savings. Remember, it's not just about the lower rate, though. It's also about the break-even point on your closing costs and your overall financial picture. Last week, I talked about this at length, so I've provided the link to that video in the comments below. But here's where it gets a little tricky. While lower rates make buying more affordable, lower rates also fuels demand. We've already started seeing sellers taking their homes off the market for a more equitable position in the spring. When that happens, lower rates, along with seasonality, will bring out more buyers. This could push home prices even higher, especially as more inventory comes online. I mean, think about it. If you're a buyer sitting on the sidelines waiting for the rate drop, it might mean facing fiercer competition and higher prices because just like you, there are plenty of other people also waiting. So if you're hoping for prices to cool, a significant rate drop might mean a double-edged sword. Now, let's talk numbers. Mortgage purchase application data, the best early indicator of demand, has flipped dramatically since mortgage rates started falling in June. Applications have gone from mostly negative trends in early 2024 to 9 out of 14 weeks of positive new purchase application data since mid-June. On the new home sales side, lower rates are really giving the market a lift. Builders are seeing a surge in demand, and it's showing up in the inventory numbers. Speaking of inventory, last week we saw an increase of 10,000 active listings nationwide. This is a welcome sign coming off of Labor Day holiday, but still far below overall normal levels. Here in the Denver market, our active listings count is higher than it's been since 2012, but if you ask buyers out there, they'll tell you it doesn't feel that way. For those of you tracking this, as long as rates stay in the sixes, we're going to continue to see some inventory growth. So where exactly are we headed from here? I mean, forecasts published still suggest mortgage rates could end 2024 around 6.5%, with some experts thinking that rates could land 2025 at 5.9%, which is pretty funny actually, considering that rates most recently hit 6.1% per Mortgage News Daily. Some of the projections need to catch up. Either way, don't expect those pandemic-era 3% rates to return. Those are long gone. For rates to drop further than where they are today, we need weaker labor data, or the Fed to make a bigger move, or the lesser talked about mortgage spreads to improve. I mean, this is our big wild card going into 2025, measuring the investment risk of the financial markets. This is the spread between the 30-year fixed mortgage rate and the 10-year Treasury yield. If spreads tighten, meaning they return to their historic 1.65 to 1.85% from their current spread of 2.52%, we could see rates as low as 5.75 before 2024 ends. But that's still dependent on economic conditions and how the Fed plays their cards. All right, so to wrap it up, falling rates presents both opportunities and challenges. Whether you're thinking of buying, selling, or refinancing, now is the time to really evaluate your position. Stay sharp, talk to your mortgage lender, and make sure that any move that you make today aligns with your long-term financial goals. And if you have any questions about refinancing or buying in today's market, drop it in the comments down below and let's chat. And if you're ready to explore your options and jump in, click the link in the description to schedule a strategy session with my team today. All right. Thanks for sticking in with me. If you want more insights on the housing market, check out the video I've linked on the screen right now. Don't forget to like, subscribe, and share this video with someone you know will benefit from it. I'll see you in the next one.